And it's a beautiful Friday morning right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. I'm Ladi Williams. First off, let's take a look at what's in the news. We see OPEC and its allies have agreed to pump more crude over the next 2 months as Russian production begins to drop following Western sanctions. The oil exporters cartel announced that it would increase supply by 648,000 barrels per day in July and August. 200,000 barrels by more than the supply agreement reached with other producers, including Russia, known as OPEC+. Statement from the White House says the announcement accelerates the end of the current quota arrangement that has been in place since July of last year and brings forward the monthly production increase that was previously planned to take place in September. And oil prices were roughly unchanged today, clinging to gains made in the previous session on doubts that producers belonging to OPEC can hike their crude output enough to make up for lost supply from Russia. U.S. West Texas Intermediate crude futures were up 1 cent at $116.88 a barrel, while Brent crude futures were up about 7 cents at $117.68 a barrel. A decision by the Organization of Petroleum Exporting Countries to boost output is what's pushing sentiment in the market right now, but it's quite a quiet Friday we're having today. And the chairman of the Senate Committee on Power, Senator Gabriel Suswan, has raised concerns over the epileptic power supply in the country. Speaking at the inauguration of the governing board of the Transmission Company of Nigeria, Senator Suswan explains that the situation is taking a toll on businesses as well as the nation's economy. Explains that while sole dependence on appropriations for the sector is not likely to address the situation, he calls for alternative sources of funding to meet up with the shortfall in power supply. Just take a listen.
The Minister of Power is leading other government officials to inaugurate the board of the Transmission Company of Nigeria. The ceremony provides an opportunity to review the epileptic power supply in the country and its effect on Nigerians.
We are aware that Transmission Company of Nigeria suffers from a lot of things. First, funding is not enough because as chairman of the of Power, I know how much the appropriation is given to them year in, year out. And so those are areas that I think that you need to join hands with the minister to see other creative ways how we can fund TCN. If we only depend on the budget or the appropriation from the federal government, in the next 20 years, we'll still be saddled with the same issues and same problem that we're talking about today.
According to the Ministry of Power, electricity supply at the moment is put at 5,000 megawatts, a situation that worries government officials.
Electricity that is being delivered is not at a level to support the economy and our population. Having 5,000, we have been hovering around 5,000 megawatts. Either we go down a bit or we go up a bit. For quite some time, we are unable to reach to a level that we desire to. And the economy has grown to a level where people have resorted, some have resorted to finding electricity through captive means and other means.
Issues of vandalism, poor funding and lack of political will are listed as some of the challenges serving as a setback to the provision of efficient electricity supply. Tackling these issues should be the task before the new board as they settle down for business.
Thank you very much, and congratulations to the new inaugurated board of TCN.
And now to our first conversation. Most recent trends analysis show the B2B e-commerce business segment is growing and expanding significantly. Research and advisory firm Forrester projects B2B e-commerce global market value to reach about $25.65 trillion by 2028. In Nigeria, the B2B e-commerce platforms are creating and expanding opportunities for manufacturing sector and distributive segment through digital channels that increase their efficiency. Well, join us now is Chidi Akubiro, MD, Trade Depot, West Africa. Join us right here on Business Morning. Great to have you.
Morning, Lali. Thank you very much.
Morning. Can you give us a quick overview of the B2B space in Nigeria? That's the business-to-business segment.
Okay, so good question. If we're talking about the B2B section, we can't but stay away from the historic. So where are we coming from in terms of how has the retail chain, value chain been across these businesses? From the onset, it's been predominantly the distributors. So the manufacturer gets the product across to the distributor within the chain, and the distributor gets it to the wholesaler gets it to the retailer, right? That has always been the channel. And then you have the retailer who is the final bus stop before the consumer. So at that end, it becomes a B2C transaction. But it has been predominantly structured to support the distributors, and even till most recently, we still have it predominantly still within the distributors' coverage, right? But over the couple of 3 to 4 years, you have structures that have come in place that have been able to focus on digitizing the retailer to see how we could get the retailer to also have the power of e-commerce, as you say, to be able to get products directly from the manufacturer, right? So parties like Trade Depot would be that bridge, right, to go between the manufacturer directly to the wholesaler, right? So making sure that that chain is cut a little bit short and faster, the manufacturer able to get his products on the shelf of these B2B stores, these retail stores, and across different ranges, and also the retailer being able to get his products from one source as opposed to the different sources that were existing before.
Quite interesting. But what are the biggest, pain points, and how do they impact, these businesses?
Well, in terms of pain points, the biggest pain point for these businesses would be the lack of access to financing, right? Because picture a typical retailer is a wholesaler in the making or a distributor in the making, and the only limitation is the funding, right? And since most of these retailers are typically within the neighborhood, there is a lot of opportunity for them to be able to service their neighborhood, but they need financing to increase their assortment, to increase the ranges on their shelves, and this typically is a problem. And there are solutions we're providing right now to see, okay, how can we give them access to this funding? How can we create some sort of economic identity for them and be able to rate them, rank them, and offer financing to them, some sort of buy now, pay later system to see how we can get them to stock up and be able to service the retailer, the consumers within their neighborhood. Second issue you would look at is the distance to market. So a typical retailer you have now in the neighborhood who wants to stock up his shop would have to close his store for a day, travel to a local market within his location, get stock from the market and still transport it back. So he's losing time, which he could have used to sell out to his consumers. He's losing money, which he has also invested in transportation. And this is one of the major pain points that they also have. Aside, obviously, the limited access to products, because the journey to the market does not guarantee that the product they would want to purchase is available for them, right? So these are basic pain points that they have.
said about the impact of inflation. You know, most have called it this year the year of the squeeze, you know, on consumers. But how are small neighborhood businesses, you know, coping with these rising prices?
I mean, the reality is that we're where we are, right? With inflation rising even to its highest point last month at close to 17%, right? But with that comes increase in prices from the manufacturers, right? And also part of the gap, which I mentioned earlier, of having to go to the market to go and purchase these products by the retailers. Within that value chain, there are a lot of players that exist. So at each point in time, some form of margins or markups are put on, which makes the products even more expensive for the retailer to be able to acquire. That link that we have between the manufacturer and the retailer that we're creating now would enable us to kind of create some sort of soft landing for the retailer, right, in such a way that he gets the products at the best possible price. So he's able to still maintain his clientele of consumers that come to him and also not feel the full effect of the price increases that are coming regularly. Also, the access to financing, which we have also proposed, gives him an opportunity to be able to buy more and also stock up his store ahead of possible price increases, even as the inflation still is rising. I mean, if you look at it in the real sense, the consumption occasion doesn't end. So people would always still go for their essentials, right? So yes, even though the prices are going up, what the retailer is doing now is to choose the core essential products to have on his shelf, which he knows that his final consumer would always be interested in coming to purchase from him, right? So these are part of the issues that we are forming solutions for.
Quite interesting, and we know the MPC recently, you know, raised rates, and it seems like, you know, going forward we might see more, you know, aggressive rate hikes. But what is your, you know, how do you see your sector actually managing, you know, these rate hikes?
Well, I mean, we would still, like I said, you can't shy away from the essentials, right? Even though there are price hikes, an individual, I won't say I won't brush my teeth because the price of toothpaste has increased, right? So within that space, what you would see is people taking decisions to stick to what they know they need on a daily, right? So the essentials would always be the focus. And yes, maybe the basket size may seem to reduce, but the essentials will still be purchased, right? So that opportunity still remains to be harnessed, right, at the retail point.
Right, and Africa's SME retailers generate about $1 trillion in sales annually and contribute $2.6 trillion to the continent's nominal GDP. But a fragmented distribution network, you know, lack of access to financing has led to, you know, inefficiencies when it comes to distribution and, you know, with many missed opportunities. How are they working to solve these problems?
Yeah, so solving the problem is in two ways, right? In terms of the fragmented distribution, I know I've mentioned earlier on, not to sound like a broken record, but the current chain, right, the value chain obviously leads to this fragmented distribution. And access to products is the most important thing for the retailer. Right, so I mean, solving this is building that bridge, that direct bridge that enables the manufacturer to have all his products across the range on the shelves of the retailers. And we're doing it right now by introducing tech, aggregating supplies or products from these manufacturers, introducing this tech to the retailers, digitizing the retailers, making sure that they have the power in their hands to basically place orders and get those products delivered to them within the shortest possible time. We're also doing this by introducing financing, right? So how do I create that identity for the retailer in such a way that I can be able to credit score him and give him stock at a particular value, and get him to pay me in a week or in 2 weeks period, right? But giving him an opportunity to have a flexible working capital that he can use to basically build up his business, fill up his store, and make himself appealing to his final consumer.
And a recent report suggested that retail sales in Nigeria increased in 2021 after trending south, for a few years. What do you think could be, contributing to this?
Well, I mean, part of how we're blessed in this country is our population keeps increasing every day, right? And with growing population, you tend to see also the growing retail chain, right, which has to serve this population, right, within the communities, within the neighborhoods, and since 95% of that is informal, right? So we are sure that as we increase in size, there will always be openings for people, small business owners, to open supermarkets, to open convenience stores, to open neighborhood shops, just to be able to cater for that growing population, right? So, I mean, as this continues to grow, you will continue to see those opportunities come out, and obviously that would be part of the reason for the increase that you just stated.
Quite interesting. But give me now an outlook for this B2B space, this year, considering the changing dynamics we're seeing before our eyes.
Well, I mean, it is going to be an interesting ride. We would have a lot of players coming into the market. We would also continue to see how we would digitize this retailer, how we would make him stronger in terms of his power to make that decision. We would see how, obviously, that space, we would open up to see how we can get products faster to these customers within a short period of time. Obviously, we would see that increase in terms of the financing, so more credits available to retailers to do more business, to expand their businesses and become even stronger, obviously leading to higher sales, higher profits for each of these retailers. Right, so that space is really going to get bigger as we go on.
Right. Well, we'll keep tracking it to see how it grows. Thank you so much, Chidi Akubiro, MD, West Africa Trade People. It was great having you on the program. All right. Now, after the break, we look at Nigeria's labor market and how HR managers are handling the Gen Z workers. That's the moment. To stay with us. Welcome back now to our next conversation. The IMF has warned Nigeria and other emerging economies to promptly repair their weak labor markets and severe schooling disruptions to prevent plunging the economies into further damage. In a new report titled Healing the Pandemic's Economic Stars Demands Prompt Action, the Washington-based lender said pandemic-induced losses for both economic output and employment would be significant in coming years, as discussed in its April World Economic Outlook. Well, join us now is Thelma Ibe, Chief HR, Future Moves Recruitment Agency Limited. Great to have you on the program.
Thank you so much, Ladi, for having me.
Yeah, so the IMF is, warning Nigeria and other emerging economies to, strengthen the weak labor markets. Can you paint a picture of, Nigeria's labor market, what it looks like right now, and what can be done to actually fix this weak segment?
Right. So the Nigerian labor market is actually an infelicitous one. The first thing is from the poor educational foundation. Like, the curriculum of many universities have remained the same for, God knows how long. And good thing is that certain primary schools are taking up the initiative on themselves to train students on leadership, emotional intelligence, communication, which is also helping. On the other hand, we have little or no investors. A couple of years back, we had an influx of investors in Nigeria. And if you count the numbers now, they've actually reduced for different reasons, unstable policies, and what you have. And then if you look at what is happening on the side of the people, that is the youth who are looking for jobs, we are losing talents in Nigeria. We're losing talents to other countries, both those that are working remotely and those that have relocated. And the government is losing two ways. One is that we're losing talent, and at the same time, we're losing on tax, because many people who work remotely actually don't get to pay tax. It's actually a pathetic economic situation, because the population is increasing and the economic record is not getting any better. And then small businesses who are trying to strive and do something are also unable to grow, thereby affecting the way businesses are run. So there's a whole lot of issues. People who are employable are asking for more than organizations can pay, and then the rest are just unemployable for different reasons. Like before now, I could fill roles in a very short time because of course, the talent was available. But right now, the talent have reduced drastically. I go through a series of search. I have to consider a lot of things, pay, location. So there are a lot of issues. Now, if you ask me what the solution is, the employees are looking up to the employers. The employers should be looking up to the government. So the solution is still, it starts and ends with the government, from creating a stable policy to strengthen the economy, to offering an enabling environment, and to providing basic business needs. I think that's the much that, that can happen.
Quite interesting. But, these are difficult times for most economies, with rising inflation, household incomes being squeezed and wages, not matching up to the inflation rate. What can employers do to actually balance this?
Like, the employers are victims of the same concerns. They're actually victims of the same concerns. There's inflation for everybody. The wages are going down. Businesses are also going down. On the other side, they're not generating revenue. So honestly, I don't see the much that employers can do. In my own personal advice, I think that employers should encourage their employees to engage in side hustles. I don't mean moonlighting. I don't mean a second full-time job. I mean things they do outside their work hours, things they can do during the weekend. Of course, without putting conflict of interest, of course, putting conflict of interest into consideration, and even the non-competes. But I think the much we can do is encourage them to have a side hustle, because things are going up 5-10 times. I don't see any employer matching that, with the business situation in the country.
Yeah, quite a difficult situation, I must say. But how are you HR managers, able to manage employee expectations, with all of these headwinds?
Oh, well, I think what HR managers are doing right now is to manage the mood. Okay, I think that's the number one thing we're doing, managing the mood from the business side and managing from employees. So trying to get the two parties to understand the situation and then, be patient about it. And then another thing I think HR managers are doing is, even though we can't get so much, right, even though our salaries can be increased as a result of the inflation and all, they just, try to make sure that salaries are paid on time. And then all applicable benefits are paid to employees while we hope that things get better.
And there's a lot of chatter about Gen Z workers, that's Generation Z, which consists of people born between 1997 and 2012, that they have a unique work ethic. Tell us about these Gen Z workers.
Okay, so I work with a lot of Gen Z. And one thing I can tell you about them, they have issues, okay? They have their good side and they have their bad side. Now, the bad side, the issues. The Gen Z world are job hoppers. What do I mean by job hoppers? They have career impatience, okay? You nearly would find any Gen Z staying in the workplace for more than 2-3 years. It has become a very difficult thing. So they're very impatient with their career. The internet is very important to them. Everything they do on the internet. Everything goes to the internet. And they're not ready to give in more. And then everything affects their mental health. They have a small issue with their fellow worker, and then it's affecting their mental health, according to them. But no doubt, they are actually transforming the workplace. They are transforming the workplace. But I know that there are 3 major things that the Gen Z world, do not like, things that get them upset. They don't like being asked to work when they don't want to work. You can't deny them of their annual leave like it was before. And in fact, you can't even tell them to work back-to-back shifts, because they just have their mindset on things they want to do. So it's actually a tough one working with them, but their contributions are very crucial. You know, they know a lot. You can tap into their knowledge and skills. They solve problems. They have ideas. They are, you know, their life is all about tech, so they can find solutions. So they're actually digital natives, and they're an activist generation. If you notice, they are actually an activist generation, which is changing the narrative of the workplace. They are requesting higher standards in the workplace, adding diversity and inclusion. So, you know, the normal workplace whereby people are being treated badly, I mean, the Gen Z world can have that. And it's actually changing the workplace, I must say.
Right, and is it changing it for the better?
Well, it's changing it for the better in the sense that, certain policies that are seen as traditional have to change, because we can't use the same policies from 20 years back. Things are changing, so we have to change. So that's one thing they're doing better. But on the other side, businesses are suffering. Like I said, they're very impatient with their career. You know, they get upset easily. They can leave the work without. In fact, they don't even care how the business is doing. They just want to get rewarded. They don't care about loyalty. But then they're not afraid to ask questions, and they stand up for what they believe in. So in as much as, you know, their negative parts are there, they also have their positive parts.
Quite interesting, you know, but these are times, you know, where we also have, you know, quite a number of, you know, job seekers trying to land, you know, jobs at this point, even though there are a lot of headwinds, you know, impacting business owners, you know, employers. But what should the job seekers be doing right now, you know, to land those dream jobs?
Okay, so I'll take my time to respond to this because it's actually important. You know, out of 200 million people, you know, the majority of the numbers are youth and many of them are unemployed. I think the first thing a job seeker needs to understand is that they need to be specific about the jobs they want. So you see a lot of people, they don't know where they want to be, they don't know what they want to do. So they just apply left, right, and center. They're not aligning to any career. And how do you do that? You have to build yourself to fit various roles. Now, what I mean is, you could build yourself in administrative skills, build yourself in HR, build yourself in customer service, build yourself in sales and marketing, and also build yourself maybe in social media marketing. And then focus on that 5 areas, knowing that the jobs are limited in Nigeria. So if you're waiting for one particular job, it may take you time. Remember, the population is too much. You're not the only one applying. So you have to build your skills in an area, around 5 of them, so that you're flexible enough, whichever comes, you can actually jump into it. That's one thing I need to say. So they need to stop, you know, applying for all of the jobs, and also they need to stop applying for a specific job. Now, on the other side, they need to learn more skills. I can't overemphasize this. The more you're staying at home, the more the world is moving. So the skills that were required last year, some of them have changed. So if you're not in the workplace, you would actually struggle more. So I think people need to learn more. Now that we have the digital age, the courses are online, you can learn as much skills as you need quickly and put it into use. So I think they need to build more skills. The market is highly competitive. So what differentiates you? If I have 5 administrative officers for a role, why should I hire you? That's the first question you need to ask yourself. So you need to build yourself to fit into what employers are looking for. Now, another thing that I've noticed is everybody has a dream job. You can have more than one dream job. What do I mean by that? You don't have to focus on a particular company. I hear people say, oh, I want to work for Facebook and I'll just keep applying to Facebook until I'm able to work for them. I don't think it works like that. I think that you should have serial or, you know, a lot of dream jobs. What I mean by that is it can be 3 of them. One can be the startups. You know, who are the startups that are doing well, that your skill matches, that you admire, that you like to work with. The second one, who are the mid-level organizations who are also doing well that I would like to work for? And then who are the global ones?
Hello, Thelma. Looks like, okay, looks like we lost Thelma there. We'll still try to get her back. But Thelma was talking about, you know, how to situate yourself, you know, at this point to make sure you're actually employable, and how Gen Z workers are actually impacting, you know, the workplace with their unique work ethics. Well, that was Thelma Ibe, Chief HR Future Moves. I don't know if we have Thelma back now. Thelma, can you hear me?
Plus the 2 million.
Okay, I guess Okay, well, we're having issues there with the connection to Thelma. Well, that was Thelma Ibe, Chief HR Future Moves Recruitment Agency, giving us her 2 cents there on how to manage Gen Z workers and also manage the situation we have with rising input costs and rising inflation with wages not meeting up. Okay, I think we have Thelma Ibe. Thelma, are you still there?
You hear me clearly?
Oh yes, I can hear you clearly. Okay, all right, Thomas. So you can continue your thoughts now.
All right, so like I said, I said they need to work, they need to be visionaries, not just a technical person. Like I said, employers want to appreciate you with others, and then you need to build your online presence. So everybody's seen online, so you need to grow yourself. You need to network as much as you can, and most importantly, stay positive. Remember that the population is more than the truth. Okay, so you're not the only one. It's a whole lot of people. So just stay positive and believe that it's good.
Stay positive. All right. Thank you so much, Thelma Ibe, Chief HR Future Moves Recruitment Agency. It was great having your insight on the program today. Thank you so much. All right. Now let's move on to the market. We have Willie Bong right there. Will, looks like it's quite a bearish week we're having, the equities market this week. That's how it's looking from here. I don't know.
Yes,
what do you
Laddie. The NGX has been staring the bear, in the jaw throughout this week. It's not been great. It's not been great for the market.
But it's great for some people.
Yeah,
though.
It's great for some people that are waiting to jump into the market. I'm not going to name names, but it's great for some people. But the bears continue to dominate the NGX. The equities have been flogged terribly this week. There's been sell-off in stocks. Yesterday, we saw Nigerian Breweries, Airtel, Africa, BN Holdings, Zenith Bank, all dropping yesterday and massively at that, getting slammed in yesterday's trading session. The all-share index dipped yesterday by 0.3%, further down, losing about 72 billion naira from the market cap. The all-share index is at 52,815.78 points as we speak. And month-to-date loss is now at a negative return. We have, it's now printing negative at the moment, 23.7 for the year to date, which is going lower, and we hope that does not run, back to the single digits that we had before. Now, total volume of trades transacted yesterday will dip by about 7.1% to 274.43 million units, and the value at 4.3 billion naira, all transacted in over 5,000 deals. For FBN Holdings was the most traded stock by volume yesterday. We saw sell pressure in that shares, and value was at 74.66 million units. That was the amount that was transacted yesterday for FBN Holdings. And Transcorp was not far behind. Zenith Bank, as I mentioned earlier, was one of the stocks that drove the market down further below the 52,000 level. So we also have banking and insurance, oil and gas sectors were deeply in the red yesterday. Moving forward, market breadth was negative, 25 stocks lost relative to 11 gainers. NASD market also towing that same line, negative returns for the unlisted equities, 0.47% down. And moving forward to the bonds market, we see also that space has not had so much traction, just a bit of demand for the 2025-2028 paper there. Not much to, look forward. The market has really been on a dry move, since the beginning of the week, and not much since the hike in interest rates on where we had that knee-jerk, almost instant movement from investors at the moment. But Ifeoma Onyejekwe is standing by to give us insights on this. I don't know if we're going to take her right now or right after the break, but just, to give us more about the market. So we're going to bring in Ifeoma to give us. Ifeoma Onyejekwe is a fixed income dealer at UBA. Good morning, Ifeoma.
Good morning, Will. Thank you for having me.
Now, Ifeoma, we had the OMO auction yesterday, and the CBN, the central bank, stuck to its guns. What can you tell us about that? Offering only 40 billion and still sticking to that? What's happening?
Yes, well, I think the market expects the CBN, they have, the stance is that they are not going to change their rates. So even in the range of bids, we saw last week for the long end, it was about 10 to 12%, and now reduced to 10 to 10.1. So people have adopted the CBN stance that, you know what, yes, we know you're not going to change your rate, so we'll just, follow you on that. And then the 40 billion they offered was exactly what they sold. They didn't sell more and they didn't sell less.
So the market has been on a dry run, I'm just calling it a dry run. That's my own term for it now, because there's really not much action going on there. Can you tell us really what's maybe some of the factors that are contributing to this? We know that, yes, liquidity has been tight. What other factors are we not seeing?
Well, for now, liquidity has been tight, but we actually did see a bit of action. Last week, the FAC allocation meeting was held. We know, it was previously postponed because of certain circumstances. And then, the meeting was postponed, so it was held last week. And then FAC allocation came in at the end of the month, which was on Tuesday. And we saw 656 billion being shared, and that caused a huge spike of liquidity at the beginning of the week, because you know that this week it's the end of the month of May flowed into the month of June, so we are having in between May and June. The huge spike in FAC inflow caused bullish reactions, some bullish reactions in T-bills market on the short end, and also the short end of the bond curve. And when that happened, we observed a reduction in money market rates because of this inflow. It was previously trading at 14%. Like you said, there was no liquidity before, but as soon as that came in, it dropped to floor levels of 6%. And for this coming week, we expect cautiousness in trading and price sessions up until the NCB auction on Wednesday, because the FAC allocation that came in has largely left the system. So everywhere, like you put it, is dry for the moment. Yeah, but next week we expect about 167 billion to be rolled over. Although the new NTB issue program calendar has not been released yet, but the maturities for NTB is 167 billion. And for that auction, we anticipate a further increase, mostly on the one-year bill, between 10 to 30 basis points increase. However, the outcome of that action is going to determine what's going to drive secondary market activities.
Okay, so I'm just going to ask, because we're seeing the equities markets really going down, and for what I heard from one of the analysts is saying, investors are probably moving portfolio from equities to fixed income space. But do you think that is what's going on, Ifeoma?
No, I don't think so, because we've not seen a lot of activities in the market, so I don't think that's what's happening. Maybe they're moving to other alternative investments in the fixed income space. No, I don't think that's what's happening.
Thank you so much, Ifeoma. We'll wait till that calendar, the bond calendar, comes out, and probably we'll have more expectations as to what the market will bring for investors. Thank you so much, Ifeoma Onyejekwe, fixed income dealer, UBA. So, Ladi, that's we have for the fixed income space. And moving on to the NESD market, as I mentioned. Now, the NESD market, if you look at it, we're back to 1 trillion naira. It's dropped down from 1.03 trillion naira that we had start opening the week with. And it did further drop to 1.02 trillion, but it went back to 1.033. So the market is a bit fluctuating with the NESD, the unlisted equities. We don't know what's really going on there. But probably we'll have an analyst someday give us a breakdown of how that market is really rolling, because a lot of people are probably quite, piked to know how that things work there, and maybe probably how to get into that market and see how we can drive
one
things
market that needs some exposure.
Yes, definitely.
Well, let's fingers crossed for the equities market close for today. Maybe we might see some bargain hunting. Since we've had quite a bearish week, maybe some bulls are trying getting on those stocks that are looking quite attractive at this point. All right, Will, thank you so much. After the break, we'll drill down on more markets. Do stay with us. This is Business Morning. Welcome back. Now let's check on other markets. We see Bitcoin still holding above the 30K level, and the market cap sitting at $1.25 trillion, and the Fear Greed Index at 10 points deeper into extreme fear this morning. We see that's a 10 points. It was getting closer to 14 points yesterday, but now we're back to 10. More extreme fear at this point, showing the sentiment with traders in the market. Bitcoin price, $30,488, is up about 2.07% this morning, and volume traded $27.82 billion, lower than this same time yesterday. And we see price of Ethereum there, $1,821. We see a Bitcoin started a downside correction to the 29,500 level, but still managed to recover back to that 30K resistance and still staying there this morning. There was a move above the 30,000 resistance zone, but that held up quite well. And we see Fridays not looking as red as most Fridays we track. Looking at the top alts by market cap, there we see BNB is up by 1.54%, mostly green. Cardano still trying to get back on that bullish trend, up 3.93%. eCash up 3.60%, and XRP at 40 cents, up 3.22% this morning. All right, let's bring in Olumide Adesina, our financial market analyst, join us right here. Great to have you, Olumide.
Yeah, great to have you, Ladi.
Yeah, well, not a bad-looking Friday. We see Bitcoin back above 30,000, but there was a scare yesterday. We saw it get back to about 29,000, have that little struggle there. But how do you see price action this week?
Yeah, the price action, just like you rightly said, has been quite on the tight range between, as Bitcoin kept oscillating between $28,500 support level to the $32,000 resistance level. And that was partly due to the mixed macros we've been seeing in the markets. First of all, reports have suggested that many top crypto firms are downsizing. We just heard that Coinbase rescinded accepted job offers, and the fact that they are trying to downsize. Also, Gemini, a fast-leading American crypto exchange, has reduced its staff by 10%, and that's because of crypto winter coming in play. So they're trying to save costs. But on the positivity, likes like FTX and Binance, Binance is creating a $500 million Web3 fund, trying to invest in projects, while FTX is also trying to be very innovative in that space by investing in different projects. So on the institutional side, we are seeing much more engagement. Prada, a luxury brand, going to NFTs. We are seeing more entities coming in. But on the negativity, US job report is coming out today. A strong dollar reading will definitely weigh on the market. We're not seeing that liquidity we saw in 2021, and that's partly due to the fact that many retail investors don't want to be caught unawares. Priorities on spending essential services, so there's no incentive in investing in risky assets. And the fact that Bitcoin has lost more than 50% from its November high has not triggered that excitement. So partly that's why the price action has been quite tight this week, Ladi.
Quite dicey, and I saw Solana was also in the news this week. We saw there was an outage, on the network, and that actually sent the price plunging. But what does an outage look like in this Solana network?
Yeah, Solana was dubbed the Ethereum killer, and the fact that one of the exciting things about Solana was that transactional cost and the fact that scalability potential seemed to be high. But just like rightly said, the outrage symptoms, which has escalated right from January, at some point we heard about 4 times at that period, has really dampened that momentum. And we saw Solana losing at some point about 20% of its price value. So while the developers seem to have brought that back, concerns are like, would it ever replace Ethereum? But I think it's still too early to put this cart before the horse. So we should still give Solana time. And I think because of the strong ecosystem it has, I think it might mitigate that.
But
right now,
what does an outage look like? Does it mean you can't send and receive, Solana tokens? Nothing works on that network.
Yeah, just like you said, it's frozen. Yeah, just like simply transaction was halted. The blockchain, the network, suspended. So pretty much that's what it entails. But I think now it's sorted out. It's sorted out about 3 days ago. So you can. But the fact that we don't see that on the blockchain, the primary blockchain. I'm talking of Bitcoin's network, and the fact that the blockchain should be seamless, perfect, meaning no outreach. That was where we triggered such concerns, Ladi.
And what are other, developers, other blockchains, looking at with what we've seen with Solana? Because we're seeing a lot of new things, happening, in this crypto space, from the UST issue, depegging from the US dollar. Now we're having a blockchain outage. What's really going on, Olumide?
Yeah, it's too early to call, Ladi, because we need to understand the fact that the crypto market is still a teenager. This is a 13-year-old market, and understanding the fact that we have about 19,000 projects. So definitely, just like you crawled the years of the internet, where we saw so many young companies trying to develop products, and we saw many mistakes along the way. Definitely, it's not surprising. But because of the systemic importance the crypto market is playing in financial markets, the market has grown from $14 billion to $3 trillion before oscillating back to, before moderating back to 1.3 trillion. Tells you the fact that regulators are coming on essential products, especially stablecoins. So definitely we're seeing the space evolve, but I think it's too early to discard. And I think this space is already reforming and improving themselves. Like, you can see much more stringent rules, much more benchmarked by crypto exchanges. So I think this will pass. It's just a matter of time, Ladi.
Right, and Olumide, we've seen, a couple of these altcoins, imagine seeing Cardano at 59 cents, at this point. We saw Cardano, they got to a high of about $3, and we see XRP that used to be at least holding that dollar mark down to 14 cents. So, most of these altcoins have been slaughtered, Olumide, but it seems the market is not fully, afraid, or, the market doesn't seem to care about this bear market as I would have, imagined.
Yeah, Larry, but, to be honest with you, I think we should not just isolate the crypto market. If you look at the price of Netflix and Facebook, Meta parent company, the share value has plummeted, embarrassing very low. In fact, if you look at Coinbase, one of the top crypto exchanges in the world, its share price dropped from $350 to $68 at yesterday's trading close. So it just tells you pretty much that the market around the world is suffering from the fact that the US dollar is hovering solidly high, and the fact that the US Fed is also planning to tighten liquidity. Starting from this month, the US Fed will start removing about $40 billion from their balance sheet. So it's expected to see tightening liquidity and price correction in many of these risky assets.
All right, Olumide, quick one now. What are we seeing for next week? Let me check that crystal ball beside you.
Yeah, well, I'm waiting for the job report. A negative job report might keep the crypto market afloat, because that would mean that Bitcoin will have much more room to break above $30,000 and be looking at the $33,000 resistance level. But a solid job report means that US Fed will come out all cylinders June 15, and means that I'll be looking at Bitcoin support level of $25,000.
Right, all right. All eyes on the Fed. Thank you so much, Olumide. Always great to talk to you, and enjoy your weekend.
Same here.
All right, now let's look at the top 5 gainers in the crypto space that we see. Internet Computer is up about 14.71%, as double-digit gain. The only one we have this morning. And we see BSV there up 8%. Glimmer Token up on that counted at $1.37. It's up by 8.83%. And we see one of the oldies there, Stellar Lumens XLM there up by 7.81%. Flip over to the top 5 losers, quite lean on that counter. We're just seeing MakerDAO there down about 2.48%. Kava down 1.86%. So we're not seeing double-digit losses this morning. So it's quite a green Friday, but still extremely afraid, extreme fear we're seeing in that market. Every trader there still wondering what's going to happen next with Bitcoin. All right, that's it for the markets, and that's a wrap on the program. Thank you so much for watching. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Enjoy the weekend.